Welcome to Killik & Co.'s Wealth Planning video. Today, Sarah Lord, Managing Director of Killik Chartered Financial Planners, will be discussing the key financial planning points for those already in retirement. Sarah, it's well publicised that financial pressures continue into retirement these days. What are the key areas that clients ask you for advice on?
That is correct. In the current economic climate, many individuals are feeling the pinch on their income and also have many big financial decisions that need to be considered. For example, how would you like your estate to be distributed upon death, and what would the impact of care costs be on your overall finances?
So what should someone be considering in relation to their estate?
In the words of Benjamin Franklin, the only things certain in life are death and taxes, which is why it's essential to have an estate planning strategy. At its very simplest, estate planning is about deciding how you would like your estate to be passed on and when you would like to begin the process. Once this has been determined, however, there will likely be a variety of ways of achieving your objectives, some of which may be more suitable than others. Though some individuals may have less need for an estate planning strategy, for example, where the assets are to be gifted to charity, it's still worth considering the potential inheritance tax implications of lifetime transfers and gifting, and how these may impact the value of an estate. Inheritance tax can cost your family thousands, but with careful financial planning in conjunction with a Killik wealth planner, you can ensure you minimise the impact of inheritance tax on your estate by making full use of yours and your family members' tax allowances. We're also finding that more grandparents want to help their grandchildren financially, which can also play a part in an effective and tax-efficient estate planning strategy. When considering how to assist grandchildren, it's essential to determine the most appropriate approach to follow, particularly given that there are a number of different investment vehicles available to you beyond a bank deposit account. For example, the Junior ISA, which was launched in November 2011, or using a SIPP to save for their retirement. Furthermore, saving for grandchildren can form part of an effective and tax-efficient estate planning strategy. Our Investing for Children Explained booklet provides a lot more detail on the various options available. Another key area to bear in mind is the benefit of having an up-to-date will. Many individuals are unaware that if they don't make a will, the provisions of the Administration of Estates Act 1925, otherwise known as the Laws of Intestacy, automatically govern the distribution of your estate. These complicated laws cover every family situation, but often don't reflect what you would choose to do yourself. Writing a will is the only way to be certain that your wishes are followed on who inherits your estate.
There's been a lot of comment recently on the cost of care, with the current government outlining some suggestions for capping the cost of care. So how do care costs impact on a financial planning strategy?
None of us like the thought of growing old and needing care. However, it's a fact of life that we do grow old, and many require care in the latter years of their life. The cost of this care can be significant, and without careful planning can significantly reduce your estate in retirement. Or worse still, you could find yourself in a position where you have to sell your house or use all your life savings to foot the bill of the care costs. Therefore, we believe that the impact of long-term care should form part of any financial planning strategy. The earlier you can plan for the eventuality of requiring care, the better.
So even in retirement, there are still a number of financial planning decisions to be made?
Yes, that's correct. Even in retirement, there are a number of key financial planning decisions to be made to ensure that your estate is structured in the most effective way to achieve your goals. Also, as I mentioned at the start, many individuals are feeling the squeeze on their income due to the economic conditions, meaning that we have historically low interest rates and annuity rates. Therefore, it's important to also ensure that your portfolio of investments is structured in the most effective way for you. For example, if your income is your primary concern, ensuring that you're invested in high-yielding investments can really assist in the level of income you receive. Killik & Co is able to assist clients in both the structuring of their wealth and also the underlying investments of their portfolio.
To find out more about how Killik & Co can assist you with achieving your financial goals, please speak to your broker. Or, if you're new to Killik & Co, contact us on the details to follow.